small time frame. So I go to the 4-hour time frame, and this is kind of where I'm looking at the major key levels in the market, right? I never truly have a bias when the market's about to open, or like, hey, Will, what do you think? Is the market going to go up? Is it going to go down? Is it going to go sideways? I don't know. All I'm doing is just formulating key levels. That's it. I am super neutral all the way up till 8:30. Okay. I don't really care if the market is bullish. I don't care if the market is bearish. I'm just identifying key levels. So for example, we can see right here that where are the key levels that if you guys wanted to draw some lines, let me change this to a little bit thicker here. If we wanted to start charting out our lines, what would we do? What is kind of shooting out to me? Well, again, it's kind of nice that my algo kind of like highlights the main key levels without really putting in too much work, and that's why I love my algo. Is we can see that one boom key level is right here. That's a key level, guys. Okay, this is on the 4-hour time frame. Okay, what's another key level? We got another key level right here. Okay, and those two places are where the algo kind of charted those levels, right? So we have two lines. I'm gonna go ahead and chart those. What else is kind of sticking out to me? Well, right now this is high of day. This candle is today, right? This is all-time highs now. We're at 24,159, right? So I'm gonna go ahead and chart a line right there. Okay, what else is kind of shooting out to me? Well, I don't want to go too far back. Like, technically, if we look at the chart here, there's support here, there's support here, there's support here, but that doesn't really matter to me because that's all the way past here. For price to come all the way back down to here, it's going to probably take maybe a couple of weeks. So it doesn't matter. We're day traders, we're scalpers, so I only care about what the market is doing as of right now. So if I'm looking at, again, the 4-hour time frame, what other key levels are kind of pointing out to me on this time frame? Truly nothing. So I want to zoom into another one. We could say maybe this is support level right here, but I don't really want to make like guess on that. I want to zoom into another layer, right? I'm only going to chart out the ones that I'm absolutely certain that are key levels. So now I'm going to go to the 3-hour time frame. Okay. And then what do I got? Do I see anything different here? Yeah, it looks like there's a support level right here, right? We can see that this was a previous level resistance, got rejected, broke that level of resistance. Now we're acting as support. Okay, now you can see the market's kind of shooting back up off that. So this is another key level. Cool. All right, what else we got? I'm not really seeing anything else. Let's zoom into now the 2-hour time frame. What do we got? Zoom in again. Again, nothing. We have a support level. We got a resistance level. We got a support level. We got a support level. Okay, let's zoom in again, another time frame. Let's go to now the 1 hour. Zoom in. Okay, what do we got? All right, we have an algo that says, hey, this is a key level. Go ahead and chart that. Cool, I will. And I didn't see that until actually my algo. So my algo actually helps me identify key levels as well, right? So again, you guys should know how to draw your own key levels and not just rely on the algo. You guys should know where those key levels are without it. But if you guys know how to use key levels and then know how to then rely on the algo kind of simultaneously, it'll be the best of both worlds. Now you guys can see that we have support here, resistance here. But again, I don't care about that because it's all the way down here. We only care about what the market is doing this second. Okay, so again, no other key levels. Let's go ahead and go to the 30-minute. Let's zoom on in. Anything else? We guys can see this is a little bit of support. We can kind of fix that a little bit, right? When we zoom in more and more, we can kind of see, oh, you know what? This is a support level. Let's fix it and make it as accurate as possible. Boom, there we go, right? What else we got? I guess we can say this is another miniature level resistance. Now, why would I put a line right here? Why would I put a level right here? I'll put a level right here because when we got rejected, this candlestick came all the way back up and got rejected again. So this is a resistance level. Okay, now I could put a support level right here as well. And you'd be like, Will, why would you put a support level right here? This is a level of support. We bounced up, came back down, wicked off of it, shot right back up. This is a support level. And why? We're on the 30-minute time frame. These are still massive time frames. So we want to go ahead and chart those levels, right? Now let's go to the 15-minute, zoom on in here, right? Now I don't really see anything. We got a level resistance, support. Now this level right here doesn't really mean it. Like, see how I drew this level? Now, it might have meant something, right, before market open, right? This key level really did mean something before we pushed, but since we pushed now and it's looking kind of weird, I'm going to go ahead and delete that level because it just doesn't look as pretty. It kind of looks like it's just in the way now. So that level's gone, right? So again, now let's go to the 5-minute time frame. Boom. Now we're at the 5-minute. And what do we see? All right, we have a few more key levels. Here's a level of support right here. Here's a level of support right here. Okay, now technically there's level supports in these candle wicks right here, but I'm just going to go ahead and ignore those and just draw the main basic ones. And there we go. Okay, I don't really like charting support and resistance levels on the 1 minute or 2 minute because if again, like I kind of talked about before, if we go to the 1 minute and 2 minute, it's just too many of them. There's like resistance, like it's just too many. It's going to confuse you. All we matter is the main ones. Okay, and that's why it kind of helps us identify them. Now, when we are in the 1 minute time frame, look how valid these levels are. Right? We can see that obviously we're missing some. Like here's technically support, here's technically support, here's technically level resistance, here's technically level support. But again, it doesn't. We don't want to put 15,000 lines on our chart because if we put 15,000 lines on our chart, which is going to confuse us, it doesn't matter. So when market's about to open here, right? We can see, boom, okay, market opens. This is a support level. This is a resistance level, right? Oh my goodness, we just broke past that level of, this was support. Now we broke past that level of support. Now this should act as a support level again. We came back down, boom, acts as a level of support, shoots back up. So if I see that, right? If I see that this is a level of support now and buyers are stepping back up into this, right? Now I'm going to wait. That's confirmation number one, right? And you guys are seeing how now I'm identifying and starting to perform my game plan. Right? This is support level. Now, okay, this just formed a support level. And what else did it form? Did anybody want to guess? What else did it form? Any guesses? It formed a higher low. Okay? And so now this is starting to look like an uptrend. We have it. Now this is our confluence number 2. We got a uptrend. This is a support level. We're starting to trade above the what? The VWAP. Okay? So that's confirmation number 3. Okay? Now our question in context is, okay, when do we actually want to take the trade? Right? And now the question is, do we want to take it as a breakout play or do we want to take it as a momentum play, right? A breakout play means we just take the trade on the most previous level of resistance on the 1 minute time frame. Now, this is when I use the 1 minute, guys. Okay, this is when I use the 1 minute. So now we can say, oh my goodness, okay, cool. This is now let's go ahead and go long. Where would our stop loss be? Our stop loss will be 50% or candle low. In this example, this candle, this massive candle wick right here, was the news candle, and you guys can see this is literally the trade that I took that I got break even stopped on. Okay, this was the trade, right? You guys can see I saw this is literally the trade this morning, went long right here, take profit was right here. Okay, take profit was right here, right? And you can see boom, push, look how close we are to TP. Look how close we are to TP. Obviously the Drake candle, the news candle made me get stopped out break even, because of course we traded on news, but then you can see it actually hit TP. When it hit TP, what happened? We instantaneously sold right back off, and that was trade number 1. So are you guys seeing how I'm identifying the story of the market? How I'm not guessing on the trades? Okay, how I'm being able to say, okay, those are my key levels. I don't have a bias. I don't care. Since these are my key levels, now let's make the story. It's right. It's like kind of like building a house. Before we want to know what type of furniture we want in the home, what type of decoration we want in the home, what type of TV we want in the home, we have to just understand what are the building blocks of a home: cement, wood, drywall, right? So just like that's the key. It's being recorded correct. So that's why the key levels means so much, because it's the foundation of me building the story of the market. Okay, so once I built the story, then I can draw other smaller 1 minute time frames to start understanding my entry points. Okay, so we can see that obviously I'm going to color code these so you can see this is purple. I'll make the entry points purple, or the take profits purple, so you guys can see the difference. Right, so the white lines are the main foundation floors of the key levels. The purple lines was my entry and my TP. Okay. And there's still, and if you guys understand this, these two purple lines are still resistance and support levels. The white lines are still resistance and support levels. Okay, but the difference is the white lines are on bigger time frames, which are going to be more valid than on the smaller time frames where I pick my entries and exits. Because again, what are we? We're scalpers. Okay, so at the same time, after we put that together, what's the next thing we want to put together? Trend. Okay, so we got the foundation, support, resistance. We got the VWAP that helps us identify if we're having stronger buyers or sellers. Okay, we got basic level of trend, right? Is now next thing is trend. So what does an uptrend signify, guys? Higher highs, higher lows, right? So what is this forming? Higher lows, higher highs. Okay, so this is an uptrend. What does a downtrend consist of? Lower lows and lower highs. Here's that downtrend. Now, another thing I want to tell you guys, and how if you guys just put one, I'm going to delete all these lines, by the way. If you guys just put one context or one confluence into the market, what is it? This is going to be actually incorrect. Now, think of this. Now, Like, oh, Will, but look, we're making lower lows and lower highs. Wouldn't you want to short this? Well, that's one confluence. Now, if you just use that one confluence, you might have taken a short, I don't know, right here, right? Would you have made money? Yeah, you could have made money, or you could have taken a short right here. Would you have made money? Yeah, you could have made money. But the thing that you are wrong is you're just guessing on one confluence. I would have never went short here, even though we were in a downtrend. For me to want to go short, I would have to have this trade below the VWAP and then see the downtrend and then look at my bigger time frame key levels. So this miniature sell-off right here, which again, overall in the time frame, who was stronger? Buyers. So even though technically you could have made money on this downtrend or made money on this downtrend, or even here made money on this downtrend, right? Even this, guys, this could have been a massive move to the downside, but I would have probably missed it and not taken it because it's not putting all my confluences together. It's not below the VWAP. It's after 10:30. Volume's dying out, right? I have to stick to my rules and the edge, right? If my edge doesn't line up perfectly 1, 2, 3, I'm gonna miss the trade and not take it. Okay, guys, and that's why I'm sometimes very patient when I take trades, and why I only take so few, because I have to make sure that all my confluences are lining up. Does that make sense? Has anybody got any questions? Okay, questions, comments. Go ahead, Scarlett. Do you have something to say?
I have some questions. Um, just to repeat something, I just want to make sure I heard that correctly. You said the bigger time frame levels are more valid.
Correct. Yes.
Is that right?
Correct. And the bigger time frames are going to have bigger moves. So, for example, like obviously this is a 1 minute support level, and this is a 1 minute resistance level. But how do we know that that's valid? And that's why we have to make sure that we go to bigger time frames. We start on bigger time frames to, one, identify the overall bias. Right. If we go to the 2 hour time frame here, look how bullish we are. Every day it's just forming higher highs and higher lows, right? Even though you guys, but what's very interesting though is, do you see the pattern here this week, right? Every day on market, almost every day on market open, we sold off before we pushed, right? Market open, we sold off. Market open, we pushed a little bit, we sold off. Market open, we sold off. Market open, we sold off. Market open, even though this candle's green, we sold off until we pushed up again. Market open, we sold off just a little bit right here before we pushed up. So you see how this whole week we were overall bullish, but we weren't bullish till later in the day, almost every day this week. Because you guys see this morning, what was the first trade we took this morning? Shorts, right? We took this trade right here, shorts, right? But then later in the day, what happened? We changed direction. We were bullish, okay? So does that answer your question, Scarlett? Do you have any other questions you kind of want to throw at me?
Yeah, and then I just want to make sure if we're trading under the VWAP, you're automatically there looking for shorts, even though your bias for the day is an uptrend.
No, if we're like when we took this short, when we took this, I don't have any bias for the day. I never do, right? Because the first
Okay.
trade that we
Okay.
took, what was it? Shorts. The second trade, what we took, longs, right? If my bias was just shorts today, like saying, oh no, I'm only going short, right? Then obviously, yeah, the first trade hit. But if it was only short bias, I would have gotten, if I tried to take any short positions, I would have gotten completely wrecked, because what happened? The trend changed. So since the trend changed, now we have to look for longs. Okay, so I never have a daily bias. That's why when people online or whatever say, find your daily bias, well, the bias changes all the time during the day. So what are you talking about? So I don't know why people say that. I think daily bias is one of the worst things that and the big names even say that, find your daily bias. Even TJR says find the daily bias, but I think that's completely stupid when they say that. But yeah, keep going. Any other questions,
So
Charlotte?
it's not necessarily, so if we're under trading under the VWAP, it's not necessarily indicating that we have to take shorts. That's not what it is,
No.
right?
It helps me
Or
identify
is
my
that?
bias. Yeah, for example, right? Let's say, like in this example right here, I actually took a trade before we actually crossed below the VWAP, right? But again, I knew that we were going to most likely break VWAP, so that actually made my confluence even better. And at the same time, what's the trend, right? What happened here? These are all the confluence on the first trade. We liquidity sweeped. Liquidity sweep means change of direction, right? That was the first thing that made me look for shorts. Second thing that made me look for shorts is that we're forming lower lows and lower highs. And then the next thing, when I told you guys my entry, was on this break right here, right? Why would I go short on this break? Because this is a key level, right? And this acted as a support level, came up, and when we started showing that downtrend and we were starting about to break the VWAP here, I'm like, okay, this is looking good. I take the short, breaks below VWAP, and then my take profit is just the next trend. Where would that trend be? Right here. Right, this was my take profit right here. And you guys can see we smacked into this level. We liquidity sweeped it. Market changed direction. And then that's why our bias then changed again to look for longs, because now we were forming higher highs and higher lows, trading above the VWAP and so forth. Does that kind of make sense, Scarlett?
Yeah.
Okay.
And it's only a liquidity sweep because it breaks the level and then it changes direction,
Correct.
right? If it wouldn't break the level, then it wouldn't be a liquidity sweep.
Correct. So like for example, let me see if I can find an example here. Here. This right here is not a liquidity here, let me show you. This is not a liquidity sweep. You can say, oh, Will, we have a support level here. Look, it breaks below support level. It sweeps these lows. It comes back up. That's not a liquidity sweep. A liquidity sweep is change of direction. Look, I only use liquidity sweeps when the market's changing direction. So if we're bullish right here, this is a liquidity sweep right here, right? Why? Because we swept these highs and then changed direction. So that is a valid liquidity sweep, okay? Now look what happened here when we changed direction to the upside, right? What happened? This now was a change of direction here. We swept these lows, we started changing direction, we formed higher lows, and then market changed direction. So liquidity sweeps only happen when the market changes direction. When you're already in an uptrend, there's no such like this. You're like, Will, is this a liquidity sweep here? We broke this level, swept these lows, continued higher. No, because the overall direction was already bullish. We already knew that we were in an uptrend, so we just have to wait for a retracement and then continuation. Does that make sense? So liquidity
It
sweeps
does.
only matter with reversals. Okay.
And
So
then would you call it a momentum play if you take a trade when you identify the liquidity sweep and you're like, whoa, this is going to change direction, and you take
correct.
a trade?
Yeah.
Is that a momentum
A,
trade?
a momentum trade is when that we already identified the trend and then it's continuing in that trend. So for example, like in this area, we saw that liquidity sweep. Cool, we're changing direction. A momentum trade was a trade we took this morning when now since this is one confluence, then we formed that lower high right here. This is now that lower high. So now boom, I already know we're in a downtrend. Okay. So then when we kept on continuing to sell off, now entering here, this would be considered a momentum play because we already identified the trend. And since the trend is already identified, that's the momentum and the continuation of that downtrend. Okay. Does that make
Got it.
sense?
And aim,
Yeah.
yeah, it does. Aim High asked a great question. She's asking for clarification of what your confluences are.
Yeah.
So it's VWAP, key levels, and trend.
Yeah, so confluences is I'll put this in order. I'll put it in order. So first thing is key levels. Okay. Support resistance levels. Okay. Higher time frame levels. That's confirmation number one or confluence number one. Right. I wouldn't really consider a support resistance a confluence because confluence means the decision that you are correct or incorrect. So actually let's separate that so I don't confuse you guys. Confluences mean things that you see in the chart that make you say, okay, I'm going to make that decision. The support resistance isn't a confluence. It's a building block to help you make that decision. A confluence is saying, okay, I see this and this and this. I feel like this is going to happen, right? So the first confluence I want to see is, okay, are we trading above or below the VWAP? Okay, next confluence is, and this is not in order, is trend. Are we in an uptrend or are we in a downtrend? Okay, the next confluence I say, are we about to get close to a key level? I guess you can kind of put support resistance into a confluence. Okay, and when we put all of that together, we form an answer, kind of like in science, right? When you have to identify your hypothesis, your thesis, or whatever, I forgot the order of biology or whatever, but you make a question, you ask yourself a question, and then you have to prove that your question is valid or invalid, right? So same thing with trading. We have to formulate a thesis and then see if our thesis is correct or incorrect. So when we're taking trades, how can we put to make sure that we're right or wrong? Our confluences. Okay, what trend are we in? Where's our key levels? Are we what's the price action? Do we have good volume? Do we have any news? Are we making higher highs, higher lows? Do we have a key level coming up? Right? Those type of things. And when you form all that together, you make a decision of what you want to do in the market. Now, when you make a decision, you still might be wrong. Just like when I trade, I still might be wrong when I make a decision. Okay. But just because I'm wrong, that's where stop loss and risk management comes into, right? There are all different types of bubbles. There's edge, there's psychology. So there's like learning to know how to trade. There's psychology. And then there is what's the other one? Being able to do it over and over and over and over again. Okay. So you have to put all those building blocks together, risk management, and then when you put it all together, it's like you're a big orchestra. You play together beautifully. If you guys are struggling on risk management but perfect on your edge, you're not playing it in sync, like perfect harmony. You guys are still going to mess up. But the hard part about this is putting all of those building blocks together and then being able to make those quick instant decisions, because you guys know how quickly this market goes. So all this stuff that I just kind of explained to you guys, I'm doing this in seconds. Okay, boom, we just swept. Oh my goodness, okay, we're in a downtrend. Okay, where's the next key level? Okay, we trading. I'm doing this super, super quickly and making those decisions super quickly. And that's where the practice comes into. Okay, it might take you some time. Like I could say, okay, what is your game plan? But if it takes you 10 minutes to identify a game plan, well, you're just too slow. That's why a lot of you guys say, oh, I missed the trade, because you guys haven't identified or understood what's going on. It might take you a few minutes, which again, that just comes with patience, practice, and consistency in doing this every single day, right? So I think what you guys are struggling with right now is it's being able to put all the building blocks together. Half you guys probably understand the edge, but suck at risk management. Half you guys are amazing with risk management, but suck at the edge, right? Once you guys can put everything together, that's when you guys are going to start seeing that consistency. But I feel like a lot of you guys in here, some days you're green, some days you're red, some days you blow accounts. Some days you're green, some days you're red, sometimes you blow accounts, because you're not putting it all into a one big like equation. You know what I mean? Your initial stop is below the previous bar. Sometimes, okay? Not all the time. And that's coming with experience and being able to read price action. So for example, right? When I went in long here, my original stop, right, was all the way down here, candle low, just like you said, previous bar. Now, let's say we didn't have this massive green candle and we only pushed halfway. Well, if after this candle, where's the next key level, right? Where's the next key level? The next key level is going to be right here, because what is this? This is a support level, right? This is resistance, break back above resistance, acting as support. So if I'm saying, you know what, I want to give this more room and I want to have a wider stop other than here, where should I put my stop loss? Here. Because if I put my stop loss here, this is going to say, okay, we break this level, my thesis is incorrect, right? Because now we're just selling off. So I usually put my stop losses at previous candle low, right? The candle we enter on, or depending upon price action, we have to put it at the next key level, which in this example would be right here. If we're going to go short, right? If I'm short right here, and this one, let me make this level green. If I'm short here, where should I put my stop loss? I could put it initially at candle high, but let's say we didn't have that beautiful sweep. We started getting choppy. Let's say we didn't see, when I started seeing chop, where should I put my stop loss? All the way up here. Why should I put it all the way up here? Because this is the most recent level of resistance. So if we break that level of resistance, what is probably going to happen? We continue to the upside. My thesis is wrong. I need to get stopped out of my trade. Okay, so that's why I think a lot of you guys struggle, because, okay, Will, you say put your candle stop loss at candle low, but then you move your stop loss, but I don't know why you're moving it, because I'm moving it to the next key level to make sure I can give it some room. And especially in these bad market conditions, and especially in markets that are super choppy, just really bad this month and last month, you have to have wider stops. But having wider stops meaning you have to manage your position size more precise. So when you guys are over leveraging and you have wider stops and you do get stopped out, because sometimes we do lose, it's going to eat you alive, right? So, sweet. Any other questions? Questions, comments, concerns? Again, we'll go more into depth and more things really in depth next week as well, but I really just wanted to go into a lot of this tonight before the end of the week. So, yeah, Scarlett, go ahead.
Sorry, I'm going to ask maybe the same question again. If we're trading above the VWAP, then do you expect price to gravitate towards the VWAP? Same if we're trading below the VWAP, are you expecting price to kind of go towards the VWAP?
So you're saying if we're above it, you're expecting to come back down to touch it again? Is that what your question is?
Yeah, so like right there
It's
where
like a
you're at right
magnet.
now, we're
Yeah.
trading above the VWAP. So what does that tell you?
That right now buyers are in control. So if we're trading above the VWAP, who's more in control? Buyers. That doesn't mean that's just one little question that I haven't answered. It doesn't mean where I want to actually enter my trade. It doesn't mean that I actually know where I want to put my stop loss. But I do know that if I can see that we're trading above the VWAP and we're forming an uptrend, boom, there's two questions answered that I feel more confident in going long, right? Now you guys can see when we trade really, really high away from the VWAP kind of acts like a magnet, right? We can see eventually what happens. It actually comes all the way back down to close to the VWAP. Now, when does that actually happen? We never know, but that's why we don't really want to focus on, oh, it's eventually going to sell all the way back off the VWAP. Let's take shorts before to the VWAP. That's super hard to find and super hard to identify. So long story short and quick answer is just when we're in trading above the VWAP, we're bullish. Trading below the VWAP, we're bearish. But that's just one confluence. You have to put everything in together to make your answer. And you have to put everything together very, very quickly. Okay. Yeah, exactly, Bax. Okay. Yeah. Any other questions though, Scarlett? And don't apologize. The questions are super important. That's why you guys are here to learn, right? To get better at this and to be able to now what I'm saying, rewatch it and then practice it. And that's why I always kind of push paper trading, right? I'm kind of glad Scarlett paper traded today because being able to do this, like if you joined like a couple days ago or even a couple weeks ago, you guys are not going to be able to put this in beautiful harmony in 1, 2, 3 weeks or even a month. It takes time. And that's where a lot of people don't understand is they jump into this super quickly and they think that it's okay, uptrend, that makes sense. Downtrend psychology, okay, that's easy. But then being able to put it into practice every day, every single day, and make sure you don't break your rules every single day. That's where people struggle at. And that's why people fail because they might be good at this for 1, 2, 3, 4, 5 days in a row, but then they might get lazy one day. They might start breaking their rules. They might say, oh, I'm on a crazy hot streak. I don't need to really put a stop loss. And that's where people start blowing accounts and failing. They're like, oh my gosh, I quit. I almost got a payout. I blew my account. This is stupid, right? So I took 3NQ traded and waited for TP on paper. This is used for me. Good. Right? And we're going to be going over a lot more examples and a lot more things for this. But I know this week I was really just kind of talking about psychology because psychology is very important to talk about as well. Just besides the actual fundamentals of trading, it is super crucial to guys get your guys' mental down because you guys can be masters at what I just talked about. But if your guys' psychology is just absolutely garbage, you're not going to become profitable. You have to have a beautiful psychology with understanding of how the fundamentals work. And then again, just like I said, put them together. Okay. Beautiful backs. Awesome. Okay. Anything else you guys want to talk about? I know it is a Friday, so I do want to get you guys start your weekend, enjoy your weekend. Don't look at the charts. Get away from the charts a little bit. Again, next week, I don't think anybody, by the way, the challenge, nobody got a payout. And I think one person passed. But again, the challenge was to get a payout. Whoever gets their first payout or to be able to get a, a bigger payout. Nobody was able to get a payout in 2 weeks. So what we're going to do is we're going to restart the challenge. New people can join. And now I'm going to put the prize to $600. Okay, so it was a $300 giveaway. Now the next one is a $600 giveaway. So whoever can get the first payout in that time frame, I'll probably start that Monday, and then it'll go till the end of the month. Okay, and so whoever wants to join, again, go ahead and DM me. So if you guys want to join, all you have to do is buy a new TPT account. The people that join, and you have to buy another one if you want to re-enter, buy a new TPT account using the link in my Discord, and we're going to do a $600 giveaway for the first person. It's the first person that gets a payout, or if multiple people get a payout in that time frame, whoever got the bigger payout or the more payouts. Okay, so that's going to happen. I'll put a note in the Discord so everybody else can be able to get there, but that's going to start on Monday and then end by the end of the month. Okay. It really helps me when you give your initial entry, second entry in your TP. I learned from that. Good. And that's what I want you guys to do is people like you guys show up to the lessons, ask questions, learn, right? Practice on your own, right? If you want one-on-ones, ask for those one-on-ones. And then from there, put that into practice with us in live trading, right? Great lesson. The way you explained things today really made it click for me. I'm glad I joined. Have a great weekend, Will. Yeah, I appreciate it, Alex, right? And that's what I'm here for, to make you guys profitable and make you guys not the 95% that fail, but the 95% that actually succeed. Okay. But other than that, that's it for me, guys. I hope everybody has a great rest one. I'm not going to do Trader of the Week. I'll probably push that till Monday because I'm still thinking of who I want to pick for Trader of the Week. So that's going to be announced on Monday. But other than that, have a beautiful rest of you guys this weekend, or start of your weekend. And I'll see all you guys on Monday. And let's finish this September month on a green note. Anyways, peace out, team. It is recorded, and I'll catch every single one of you guys next week. Peace, peace. I got you guys, and I'll catch you guys later.